Good morning, good afternoon, good evening, ladies and gentlemen, wherever in the world you are. I hope you've enjoyed the conference so far. My name's Lawrence Caldicott. I'm Senior Content Director for FinTech Connect. I'm really excited about this panel. It's one of the highlights of the day, and I was really pleased with how it turned out. We have some fantastic panelists from East West Bank, Albertsons, Verizon, Incode, Wells Fargo, so a mixture of huge brands, fintechs, and financial institutions. So it's going to be a great discussion. To lead this discussion, I couldn't ask for anyone more qualified. I've got Ginger Schmeltzer, Senior Analyst at Aite Group, discussing what does the US payments ecosystem look like post-COVID. Ginger, the floor is yours.
Thanks, Lawrence. Welcome everyone to our panel. We are looking forward to today's discussion. I'm sure this is a topic in the front of everyone's minds with what happens after COVID and how do payments continue to evolve. I've got a great group of panelists here, and I'm going to kick it off with allowing each of them to introduce themselves, and then we'll dive into our discussion. Jesse Sandoval, let's start with you.
Great, thank you very much. Excited to be here. Again, I'm Jesse Sandoval. I'm a Senior Product Manager at East West Bank. East West Bank is a bank located in Pasadena, California, and I manage the product team that's focused on payments both domestically and globally. I'm happy to be here. Thank you.
Great to have you. The other Jesse, Jesse Franklin, over to you.
I know there's like 5 Jessies in the world and you got 2 of them here, but
lucky us.
It's great to be here. Thank you for the invite. My name is Jesse Franklin. I'm Senior Vice President for US and Canada for Incode, and Incode is a biometric identity company creating the customer experience of the future, and very glad to be here.
Glad to have you. Suresh, up to you.
Thanks, Ginger. This is Suresh Venkateswaran. I'm the Head of Product and Innovation at Verizon Wireless here for North America, responsible for a portfolio of products and digital payments, and a lot of new product initiatives that Verizon is looking to get into in financial services. And definitely looking forward to this panel discussion here with this esteemed panel. Thanks.
Thank you. Kothai?
Hi, I'm Kothai Senthil. I lead payments for Albertsons, which is a grocery chain in the US. And I lead payments from a product as well as a risk and strategy and operational perspective.
Thank you. And last but certainly not least, Michael.
Hi, Michael Knorr from Wells Fargo Bank, part of the leadership team here in Global Payment Services, which is sort of the correspondent banking arm of Wells Fargo. We serve other financial institutions around the globe in their payment needs to access the US wholesale market. And I'm also co-chair of the Swift Payment Market Practice Group.
Welcome, welcome all of you. Thank you for the introductions. We'll just dive right into our questions. We've got a lot of great panelists and a lot of good things to share and not a lot of time to do it. So we'll get going. I'm going to kick it off with Kothai. Kothai, the title of our panel is What Happens to Payments Post-COVID, but it's probably important to start with how the pandemic forced a rapid shift from in-person to digital transactions. As we all know, a lot more online shopping started to happen. Happened for retailers, banks, consumers. How did that work for Albertsons? And what were the challenges you guys faced throughout that time?
Yeah, of course. Over the last several years in the grocery space, the trend has been moving towards e-com, but COVID really forced that trend and really forced an acceleration of it. So when I look at our numbers, our sales numbers that were pre-COVID, meaning January, February of 2020, and then I look at March and April, the amount of e-com volume that we saw increased by an exponential amount. We started off the year at something like, say, 3 million in e-com volume on a monthly basis. By the end of the year, we were in the hundreds of millions in e-com volume on a monthly basis. We don't think that growth is going to, we think that growth will continue. So we don't see any sort of normalization in that. But it's interesting because when that happened in March, I would say we weren't as well positioned as we are now. When March happened, we took a lot of our engineering resources. We had to hire a lot of outside consultants to come in and help us make our platforms more robust to handle the volume and the traffic that we were seeing. So the changes that we saw in March and the things that we did in March to accommodate that was an acceleration of the plan that we already had in place, but it definitely accelerated the timeline by several years.
And I'm assuming that presented a lot of challenges to you guys by moving that timeline up so rapidly, right?
it was definitely a challenge at the time. But I think the way that we built our systems and the way that we built our platform allowed it to scale pretty well and pretty quickly. And that's a platform that we've been building on over the last several months.
Suresh, your other retailer in the space, how did that quick shift work for you?
Yeah, I mean, you just sharing the same view as Kothai here, right? With Verizon, we have 7,000 plus stores, and we have customers walking in, but we have multiple channels, like whether it's mobile channel or digital footprint. But what we've seen, and I think from a acceleration, especially a lot of people are expecting to tap into contactless payments. So we have to ensure that all the stores can accommodate that. And another trend that we are seeing is the movement of fraud, especially from offline point of sale to online touch points, right? So we have to ensure that as retailers or as brands and businesses, any touch point is secure from a fraud standpoint. And I'll speak more and when we get specific to some of those topics there.
Great. Other panelists, anything to add on here?
I think I would just add. Oh, sorry, Michael.
Go ahead. No, go ahead, Jess.
I was going to add that from our perspective, we saw identity become part of the forefront of all of these major institutions as they had to deal with what was primarily physical flows and physical payments to suddenly becoming online flows and online payments and that rise. So the question became, how do we identify and how do we reduce fraud, but also how do we set up for a world in which people don't want to be touching pieces of paper, people don't want to be grabbing pens, people don't want to be having that experience. And through ours, for us, biometrics, through facial recognition, we've started seeing a lot of people wanting to implement, like, well, could I check out with my face? Could I do onboarding with just my face and things along those lines? So that was definitely accelerated by these things that happened with the pandemic.
Michael?
Yeah, just wanted to follow on what Suresh was mentioning. Definitely, we've seen also increase in fraud on there as more people work from home. And definitely in some international markets where the infrastructure wasn't geared towards, or they were more manual in the first place and had to handle paper or figure out how to do it, right? There we've seen a lot more issues in switching to a more digital environment and making a lot of mistakes initially because the processes were not set up, definitely in the wholesale or with corporate clients out there, to handle sort of these sort of transactions or a remote work environment as appropriately. Now that's all changed, I think, over the last 12 months, that's for sure, right? Everybody has sort of tightened up the procedures and processes around that, but you could definitely see it, right? How definitely some of the simple fraud attempts, right? Business email compromise was sort of fairly successful, right? In a certain, initially in the pandemic, as folks had to adjust, right, to the new environment.
Yeah, I think we all know fraud follows the volume. And so when it shifted online, a lot of it went there as well. And as Suresh, we'll talk more about that. Let me shift gears over to Jesse Sandoval. One of the biggest things we've all read and heard about and experienced in the pandemic is the decline in the use of cash, right? To Jesse Franklin's point, I mean, people didn't want to touch anything, and certainly merchants didn't either. And so there was a decline in the use of cash and an increase, obviously, in digital payments. How did this impact, as a bank, how did it impact your operations and your product planning?
That's a really good question. Thank you, Ginger. Well, first, there was the issues we had with logistical issues with handling cash. You have, and this is a good lessons learned, we had merchants, retailers out there who had contracts with armored carriers, and those contracts have 60, 30 days cancellation clause, and all of a sudden the industry stops. You have an immediate shutdown, and you have these retailers struggling whether to cancel. If they cancel completely, they need to go to rebid, and they don't know how long is this going to take. If they put a temporary stop, they still have to pay for their minimums. So aside from that struggle, which was a legal nightmare, and as a bank, you want to help the client, and you're helping them through that. You also had this shift, as we're talking about, in volumes, in payments going to digital. And a lot of banks, and I talked to other bankers as well, is they were building platforms, very sophisticated on the front end, portals, but the back-end systems are still old legacy systems that they were in the process of upgrading. So they have this middleware trying to handle the volume. But when you have a surge of the volume that we saw and the shifts that we saw, I mean, I read a report last week, and I'm quoting here, it talked about the volumes that we saw over the last year, the growth that we saw over the last year is actually generating as much as the growth we were expecting to see over the last 10 years, in the next 10 years.
Mm-hmm.
And as Kothai said, when you put that in perspective, you have this shift in volume. So the operational impact that you have in the back end, some FIs and our partners on FinTechs weren't able to handle that. So it was compounded with that. We saw also a major shift, and you have marketplaces that are doing business slowly that were coming to the US from overseas. But all of a sudden now you have all these market players and players from other parts of the world selling in US marketplaces. So although we have the logistics to be able to supply and fulfill those orders, but being able to move these payments on top of what's going on with COBOL all digitally created a nightmare in the back office. So I believe, we're going to continue, as Kothai say, is continue to see the move to digital, and it's going to be across the board. It's business to consumer, it's P2P, but I think where we're going to see a major impact is on the business to business side. That all is moving to digital. It takes years to move a business to business payment to go. I mean, they still had checks. Now we're starting to see invoice presentments on the business side. When you put all that together, I don't think we're going to see the trends, the cash go back to the volumes that we're at. I mean, I would like to hear from Albertsons of, how expensive or how the nightmare it is to process cash. But unless you're in a specific industry like MRV, the cannabis industry, that's very heavily cash, you're not going to see the cash going back. It's all going to be digital. So I think lessons learned from this pandemic is we have to really rethink our strategy, think about short term, not so much long term, be very nimble, prepare for this shift because it is happening. And on top of that, we're seeing QR code payments. We're seeing the cloud kitchens. We're seeing the buy now, pay later. So it's just a whole, just compounded with different types of payments. And it's exciting to be in the industry during this time.
Absolutely. And I think you brought up a good point that and I had asked you about cash, but you're right, check was already on the decline, and this has pushed that even further and faster, I imagine. Michael, is the other banker on the call, anything you want to add to what Jesse shared there?
No, I think that's it basically, right? I mean, my part of the business are very digital with in the wholesale space. So we've seen obviously their recovery of the volumes that first declined as the overall exports into the US dramatically dropped, right? And that got reversed dramatically, 6 months afterwards, right? And that's where we see obviously now we have issues in reestablishing supply chains, right? And the shipping industry that has also impact eventually on payments, right? Because the goods that were supposed to be paid, delivered now, if they're late, right? Then also that delays some of the payments out of international trade, right? So that'll take some time, right, to adjust, right? Because it's as we learned, right? It's easy something to stop something, but much harder to get things started. We see this across the airline industry and supply chains and manufacturing in general, right? And that has always then an impact, right, on the overlying financial flows as well.
Great, thank you. Anyone else want to weigh in on this question?
Yeah, so just building on what Michael was saying, right? I think the supply chain, especially something that the payment industry has been impacted is because of the global chip shortage. With what happened with COVID is more and more people relying on contactless payments, right? And Mike, as Jesse mentioned, cash is not as popular as earlier. I'm sure it's not going to completely change the ecosystem where cash is completely going to be disappearing, but contactless payments, EMV chip validated payments are going to be very important, and the global chip shortage is impacting. Verizon launched the Verizon Visa card bang in the middle of the pandemic last year in June, and today, I'm happy to report that we are actually announcing another card program for families, and all of these are contactless and card products, and we are heavily reliant on the chips. And the global shortage requires retailers like us to plan ahead. And see, how do we manage? Do we work with multiple vendors? Do we work with one vendor? Right? So strategically planning for all of these things and thinking ahead 6, 12, 18 months in advance.
Yeah, absolutely. Suresh, since I've got you, I'm going to circle back on Kothai. Sorry, Jesse, you wanted to add?
Yeah, I just wanted to talk a little bit about the security of contactless payments, and especially compared to MagStripe and some of the other formats that are out there. I don't know if some of the folks here have worked at merchants for the last 10, 15, 20 plus years, but mag stripes were those were easily fraudsters can come in and figure out what's on that mag stripe, and they can copy those cards and use them. Albertsons has a bunch of gas stations, and some of those gas stations still accept mag stripe cards. And when we look at the fraud rate between EMV versus mag stripe versus e-com, all of those have a different fraud rate. Contactless kind of fits in the EMV bucket, and it is much more secure. The amount of fraud that we see on EMV and contactless is effectively zero. It's so small that it's not even worth measuring. And the fraud, generally speaking, when you really drill into it, is not the EMV chip. It's the fact that the cashier actually overrode that and then typed in the actual 16 digits. So the fraud is effectively zero for those products. And that is where we are trying to push our customers into more secure products, into faster products to check out. The time between contactless and EMV is also slightly different. So we're definitely pushing our customers in that avenue, in that area.
Yeah, and that's what I was getting ready to tee up to Suresh, so that's a great lead into it. You guys have both mentioned kind of fraud and the experience of how fraud has shifted during the pandemic and with the new products, and encouraging customers to use certain products over others because they're more, I guess, fraud deterrents. But one thing I think about it, we've always had to balance kind of customer experience against security and fraud management, and the more you move online, the more kind of hoops there might be to jump through to verify identity and authenticate. And so, Suresh, I was going to start with you on this one. Like, what have you guys been doing to help to balance that and keep an excellent customer experience while also protecting your customers' privacy and data?
Yeah, great question, right? So as a retailer, we are obligated through the FCC and other regulations where privacy is paramount, right? And especially with situations where most of the fraud is kind of moving online. I'll kind of build on what Jesse Franklin brought up earlier, right? I think we have to leverage tools that can balance great customer experience, because we definitely want to improve conversion, but don't want to make it a friction-filled experience where customers drop off. So it's that delicate balance where we put in the right friction, where the negative actors are prevented from moving on, but then we are able to get the good customers on board quickly, do the KYC validation, and get them into the product itself so they can start having a great experience. So I don't know, Jesse, if you had any thoughts on how some of the tools that we mentioned around validation of customer identity and some of the tools differently on the mobile ecosystem.
Yeah, and I think now you guys are speaking my language. I like it. But essentially I think the point that was mentioned that's really important here is this balance between friction and fraud. If you think historically, every single retailer, merchant, bank has always had to dealt with this balance, right? Like, how do I increase security without increasing friction? Because the more friction you put, the more security you're going to have, and vice versa. One of the things that we've seen in our company that has driven us to the traction that we have is we're changing that equation. For the first time, we're able to go to merchants, we're able to go to banks and tell them, like, hey, for the first time ever, you can actually decrease the friction in your system while increasing security. And we see that because we end up having higher conversion rates than what they had before and lower fraud rates. So it's that changing of that equation, of that balance, that's so powerful with these new technologies that exist if they're implemented the right way. So for us, it's, you talk about, Kothai, you talk about like this increase in security. Well, how can you maintain that security but continue to improve the customer experience, right? There were all these memes that came out when the chip cards came in, where it's just like, were people waiting for the chip and all of these things that were frustrating, like the lines got longer and all of these things. And frankly, as a consumer, I never understood the change to chips. It was so frustrating. Like, why do I have to do this? Why can't I just swipe? Hearing you talk about this changes in fraud actually makes sense. So what we're seeing is, whether it's onboarding to a telecom product, whether it's paying in a retailer, signing up for a bank account, when I can actually create a process where all you have to do is take a picture of your ID, take a selfie, and then you're authenticated, and it happens immediately. It happens through artificial intelligence, doesn't go to call centers in different parts of Asia. The experience becomes super powerful because you're improving conversion rates. You're continuing to reduce fraud because it's the most secure form of payment. And you're also creating a wow moment, right? Like when the Amazon Go stores came out, everyone was like, that's so cool, you can just walk out. Well, you can create that. The technology exists for everyone, right? So it's the combination of those wow experiences that every enterprise wants to create for their customers with better conversion rates, which means more money, with lower fraud, that means security. Well, it's a pretty good combination, and that's what we're offering to our clients. And I apologize, everyone. I had locked the door, but my 2-year-old just walked in. I'm sorry about that.
Well, I think it's an interesting topic all the more, right?
Absolutely. Everyone wants to hear more about it. Jesse, if you're free, I was going to follow on to your question there.
I am. This is what's happening right now.
Yeah, he'll listen in. It's all good. It's all good. Yeah, I thought your example was a really good one about when contactless came out and we were all having to, not contactless, sorry, the chip came out in the US and we were all having to dip our cards, and there was so much kind of, why do I have to do this? This is ridiculous. It's faster to swipe. And we, in the payment side of things and the banking side of things, can go, well, it's more secure and this is better. And certainly Kothai, to your example, like this is much less fraud. But as a consumer, I don't care. I'm not liable for the fraud anyway. And so there seems to be really a need to educate consumers, about why they should be using these things. Because it's not impacting me directly as a consumer. And so why do I want you to use my face or my fingerprints? We all know someone who's reluctant to do that for any number of good or bad reasons. It doesn't like that kind of biometric level of security. So Jesse, how do you guys manage through educating consumers and businesses on the benefits of that and getting them over the hump of that kind of privacy concern?
Yeah, it's a great question. So I would say there's a couple of things that have happened in our world. Well, the first off is we always do facial recognition as an opt-in measure, right? Like the line between identity and surveillance is consent, right? When I give you permission to use my face, then I'm happy to use it, right? The experience is better, it's easier, it's faster. When someone uses my face and recognizes me without my consent, that's Big Brother, right? That's what people are really afraid of. So everything we do, it has to be opt-in from the customer, right? So if you're gonna do it, if you're gonna provide an onboarding experience, if you're gonna provide a checkout experience, right? You have to provide alternative options in case there's a subset of the population that are just never gonna be comfortable with that, and that's okay. The second piece is around educating how we manage the facial recognition as in storage of the faces, right? Because there's all sorts of regulations, there's PII, there's all sorts of things around this. The way that we manage that is we actually don't store the faces. So we live in a world where if the Department of Homeland Security gets hacked, you kind of have to assume that at some point you're going to get hacked, right? Like you can take all the precautions, you can do all the right things, but it could just happen. So what we do is we're really not matching faces, but whenever you take the selfie, we do a one-way hashed mathematical representation of your face. It's a 2 kilobyte string, and that's what we store. So the algorithm converts your face to a mathematical string. That's what we store. So if we were to get hacked, all they would steal is a bunch of mathematical strings that they couldn't reproduce a face out of. So now that's really hard to educate someone, right? At the point of like, hey, let me talk to you about like one-way hash mathematical strings. That's really not going to work. But that's how we educate our enterprise consumers. And the things that have happened, there's really there's 3 developments that have really helped our industry. The first one is the introduction of Face ID by Apple. If that had never happened, it would have been really weird for my bank or my carrier to ask me for my face while I was onboarding. That would feel really intrusive and weird. But Apple normalized this, right? Like we're all now used to using our face to log into our devices. So that's actually normalized the consumer experience, which was super important. Second part is the proliferation of cameras, right? This couldn't work if there were not cameras anywhere and the cost of cameras were super cheap. One of the things that we do is we plug into any camera in any device. You don't need to buy new cameras. Like there's any type of camera with an internet connection, our technology works. So the proliferation of these devices actually has expanded the industry tremendously. And last one, which we discussed a little bit, was COVID, right? Like suddenly people is like, hey, you can either grab this piece of paper and sign this, or you can just show your face. Well, I'm not crazy about privacy, but like I'll just show my face. I don't want to touch these things. So it's a combination of all of these things that have really accelerated our industry and gotten us to a place where it's quite normal to use your face. It's quite normal to kind of like do the things that you do, And then once you allow that to happen, the experience is just so much better, right? Like walking out of a convenience store, like being able to onboard to a bank account in 30 seconds and doing all of that in a far more secure way than it was done before. It's the combination of all of it that's really powerful.
We're trading off a little bit of privacy in return for convenience as part of that. And the education then is around how it's really not that much of a trade-off. So you're not giving up much of your privacy. Is that a fair summary?
Yeah. And we are seeing that here at Verizon for our products, right? We have to educate customers. We see the trend and we want to benefit from that. But at the same time, we want to make sure that customers do feel comfortable. We inform them up much in advance. They have to consent to certain things. They have to be accepting to certain disclosures, because even though something is encrypted, stored in the cloud, there is a chance that it could still get hacked, right? And there's a loss of PII information. So we have to make sure the customers are quite aware of this and educate them. Education is very key here.
Yeah. Here's Michael, may make one more point on this. Obviously in the US it's differently, but if you look at EMV chip introduction in other markets, in Europe and so forth, there are a lot more sort of central or joint education, right, by government or banking institutions consistently out to consumers, right? And I haven't in many cases seen that in the US, right, where sort of each provider has to figure it out by themselves, right? And then different messages, and obviously in turn so many different merchant terminals, right? And gets confusing, right? Obviously one is responsible for educating your own staff, right, as a merchant, but definitely on the consumer side, right, what the benefits are, that you should do that. In other markets, that's where they were much quicker on this, right? There was more like a central, right, through the banking association or sort of from the government education programs available to introduce these solutions, right? That might also explain why some of these have been struggling for a long time in the US, because we never had that.
Yeah, we didn't have the Bernie platform in the US.
And I think the reason for that, sorry to interrupt you, the reason for that, Michael, is most of the world doesn't have a social security number. Right? The US is actually quite behind when it comes to adoption of these types of technologies. I see Europe being 5 years, if not 10 years ahead of the US. Latin America has regulations that are catching up really fast. Asia, it's its own world when it comes to these things. And the US, because we've been dependent on Social Security for so long and using that as a central piece of identification, we haven't relied and have to adopt all these other technologies. But the US is starting with COVID particularly. So it's like, well, we have Social Security number, but still fraud is through the roof. There have to be better solutions out there. And we see some of these large institutions starting to adopt these things because Social Security is just not enough at this point.
Right. Well, plus it's your private and public key at the same time, right? Which you shouldn't just hand out, right? That's where the problem is.
Yeah, absolutely. Right. We talked a bunch about the consumer side of authentication, right? Using Face ID, and Jesse and Michael, you both alluded to the B2B side of things, kind of like lagging consumer adoption. Are you seeing digital identity starting to filter into B2B transactions as well?
Yes, absolutely. And it's a little bit more complicated because it's not as uniform, right? Like the forms that are required for each thing is quite different, but at least the approach we've taken is we've created an AI technology that through OCR and a variety of different methods, you're able to read all of these documents. So we're actually creating onboarding experiences for businesses that are similar to the consumer experience. And we're seeing the same effect, right? We're seeing increased approval rates. We're seeing reduced fraud rates. It's definitely more challenging from a technical standpoint because the requirements are so different for businesses. But look, it's still a massive market, and it's way even more behind than consumer is. Mm-hmm. And we're seeing more requirements and more requests along this from major players.
Yeah, and definitely big pull, right? Meaning corporate customers are asking for it. Oh, I'm working from home. We're not in the office anymore. I can print this, right? And sign and scan it. How can I do it electronically, right? The form, the uploads, the security, the electronic signatures, there's a lot more now actually demanding it, right, to support our customers. Well, I mean, they're supporting our business process as well, but so it fits also in their requirements, right? Because we don't know where they physically are, right? I cannot rely on them to really handle a physical form, or me to receive it necessarily either, right?
Absolutely. Jesse Sandoval, you have something to add?
Yeah, I wanted to ask Jesse, maybe get his thoughts around this. One of the challenges I've seen, and I don't know the answer or how big this is, but we talked a lot about authentication of the user. You know, But then with all the regulations you have in the US for consumers and consumer rights, there's the authentication, but then there's the second part is the authorization of the transaction. And those are two different things that we need to manage in this whole digital world. And what I'm starting to see is a lot more claims around Reg E claims. You know, yes, I did log in, but I didn't authorize that transaction. And I think that's something that we need to kind of find a way to get around that, because as this shift to digital and to this DI or AI authentication happens, we still have to comply with all these consumer rights. And I think that's going to be a challenge. And I don't know the answer to that, but I'm slowly seeing some of those issues pop up more and more in our back office.
Yeah, and it's interesting you say that, Jesse, because actually part of the things that we've developed with our platform is around critical transactions. We have a whole set of modules around critical transactions where we provide certificates that are admissible in a court of law to prove that a transaction happened, right? And the thing is, when the friction is low enough, right, and it's just like in your experience, it's truly a seconds authentication. If someone's making a large wire transfer, right, you can ask them to authenticate. You can ask them to authenticate on their phone or through their desktop or whatever it is. So there is the issue of onboarding, there's the issue of authentication, and then there's the issue of critical transactions. And on top of it all, when you think about the position that most of you are in, well, to address all of these things, you probably have to do anywhere from 10 to 15 integrations with vendors. It's a nightmare. So again, the way that we think about the world is, how do you provide a single access point, a single integration for our clients that you can solve the onboarding challenge, the authentication challenge, and the critical transaction challenge in a way that is best in class tech with proprietary technology, but also that just solves a problem, right? I mean, very, very simple first principle thinking, the identity issue and the identity space. Most of the enterprise clients, all of you guys, just tell me who the person at the other end of the transaction is, right? Like, give it to me in the simplest way, in the most secure way. I don't care what's behind it. Just solve the problem for me. Same thing with critical transactions, right? Just find me a way and give me a solution that guarantees that if someone fights this charge, fights this wire transfer, fights this whatever it is, I have the tools necessary to go and fight this, right? So we believe that our industry for a long, long time was providing tools and modules and they're just using technology for the sake of technology rather than providing solutions. So we'd like to think of the world in terms of like, well, if we were our client, what would I want, right? Well, single integration point and all of these things that I just mentioned. But yes, Jesse, sorry, that was a long-winded answer, but critical transactions is a key piece that you can solve and that you can actually provide tools that address the issue.
Yeah.
I'm going to shift off of authentication and fraud for a minute. We've had a great discussion about it, but there's a couple other things that I'd like to cover in the little bit of time we have left. And Michael, I'm going to kick it over to you, because one of the things that we've seen, we talked a bunch about how, many players have had to kind of rapidly accelerate their plans or rapidly expand their capabilities in the digital space. But I think it's created a lot of opportunities for innovation as well. And so I wondered if you could share what you've seen as some positive innovations that have come out of the pandemic that might not have happened had this not kind of created the demand that it's had for the digital capabilities.
Yeah, well, one area definitely, I mean, hasn't come to fruition yet, but the discussion around digital currencies, especially central bank digital currencies, right, has dramatically accelerated in the US and in most OECD countries. So if we look before the pandemic, central banks were sort of academically interested, right, in the topic, right? But during the pandemic, and especially in the US, as we've seen, disbursement of payments, right, of support payments, of subsidies, right, directly to consumers, there was a lot of struggle, fraud too, right, in issuing of loans or and so forth. And so the voice have gone louder to say, well, is there an easier way better way to do it, right? How can we get this done through digital currencies, right? We've seen now definitely a change in a lot of market, be it in Europe, ECB, the Reichsbank in Sweden, here also the US, the Federal Reserve, putting certainly a lot more effort, right, against looking how central bank digital currencies will help facilitate these things in the future to a fully digitized economy.
Interesting. Kothai, how about at Albertsons? What have you guys seen as innovations that might not have happened otherwise?
There's really a lot of innovation going on. And I think some of that innovation was driven by COVID, but a lot of it was also driven by just the fact that people are ordering more. And there are services like Instacart and DoorDash and Uber Eats that are all in the grocery delivery business. And I think just fundamentally, there has been a rethinking about how people actually shop for groceries and what is the best way of having that person go through the store, pick up the items that they want, and then eventually check out with those items. So we've been fundamentally rethinking how we want that experience to be. And if you kind of think about your own grocery experience right now, it's not very different than what it was in the 1970s and 1980s, where you effectively go through the store, go up and down the aisles, and then you go to checkout and you take all your items out, put it on the belt, cashier scans them all, you pay and you leave. That experience has just not changed. So we've definitely been thinking about how we want to redo that experience. Do we want to have robots in the middle of the grocery store, just picking all the items for you, where you give it a list and it automatically shops, and then all you do is the outside, meaning you do the produce, the milk, the meat, and the fresh items effectively? Do we want it to be as simple as an Amazon Go store, where you just pick up all your items and then walk out at the end? Do we want to just redo the checkout experience and have that be much simpler and much more user-friendly than what it is currently? All of those are things that we're testing right now, and you'll start seeing them roll out in some of our stores on a nationwide basis, but we don't know what the right answer is yet. I don't think anyone really knows what the right answer is, and that's what we're building towards.
That's fascinating, and it probably wouldn't have happened now had the pandemic not happened. To your point about things not changing for 50 years, that's fascinating. Suresh, how about Verizon? Any kind of innovations you've seen that wouldn't have happened otherwise?
Yeah, I mean, I think more than innovation, right? I think it's what has been happening because of all this FinTech disruption, right? There are a lot of these options that brands have. But now as a customer, if I think about it from a consumer standpoint, and there are so many choices for me. If I look in the landscape of robo-advisory platforms or digital banking solutions, there are like several of these solutions. So which one do I choose? So I think, I mean, I wouldn't say innovation, but something that needs to happen in the ecosystem is building on the COVID pandemic situation, where people went in droves to the digital footprints and products. How do you make it easy for consumers to discover these products and have a more seamless, consolidated experience, right? Because now you don't need to go to a brand for digital bank and then go to someone else for your financial advisory services or something else for payments, right? You want to be able to pull it all together into a single seamless experience, and that is ubiquitous across any touch point. You go into a store, you go online, or you access it on your mobile footprint. So it's kind of bringing it all together, creating that experience over there. And from what's happening, this based on the topic itself, we have seen that a lot has changed. I think US has definitely been the laggards compared to some of the other economies. But I hope that these are not just trends; they are positive trends that we can build on and see how we can improve on them as things progress.
Absolutely. We've got a bunch of questions coming in from the audience, so I'm going to shift over to the questions a bit, and we can certainly circle back. I think we have one question left on our list, but let me start on some of the questions here because there's some really good stuff. One question that came in is about the impact of the pandemic on financial inclusion. So we talked a bunch about the decline in use of cash and checks, and certainly that has an outsized impact on the unbanked and the underbanked. And so the question is, what does this look like in the coming months, and how does financial inclusion evolve to kind of meet the new normal? Anyone?
I mean, I think financial inclusion would mean, now going after audience segments that earlier would have to, would be required to provide certain identity, certain, information in order to be able to, get a credit card or even to be able to open a bank account, right? I think with this, innovation in technologies and the way to be able to authenticate people using other ways, like, if someone's an immigrant using their passport or using a credit score from outside of the US to be able to give them access to it, right? Opening it up for small, medium businesses, giving them access to funds. Earlier, it would have been difficult for them to get some of those funds. So how do you, now we're able to open it up where it's easier for those SMBs to be able to have access to those funds. I'm sure this is going to continue, but that's one way I see as financial inclusion there.
Absolutely.
One of the key words we always use at our company is access, right? And it's actually it's one of the main driving things that we do is we want to provide access to people to services that they might not have had in the past. And for example, I grew up in Mexico, originally from Mexico, and I know for a fact that for a lot of the immigrants in the Latin community, it's very intimidating to walk up to a branch to open a bank account, right? Like it's scary, it's intimidating. They feel like they don't belong. And so even for a lot of them, the illegal and legal immigration, right? The ones that do have IDs, most of them already have phones, and most of them already, now they might be older Android phones, but we always talk about how do we make sure our technology provides access to those folks. And in our world, making sure you're compatible with Android phones from 2012 or 10-year-old Android phones, it's really, really important, right? In low bandwidth environments. So we're always thinking about access. And one of the things that really inspire us is how can our technology be used to give access to folks that might have not had it in the past, to the financial ecosystem, et cetera. So it's actually really important for us.
All right. Yeah, I mean, I think there's so much opportunity for financial inclusion here with the advent of technology. It's just a matter of handling it the right way to make sure that the folks have the ability to access.
Yeah. I see a question. Yeah, I see a question regarding just for businesses, right? How are they going to handle, I think, the cost of implementing this additional platform? So that's a very interesting and a good question there, because as much as I've heard from the panelists here that in certain cases, since fraud is being better controlled, we have better technology. So cost in certain areas might reduce, where we may not have as many customer service representatives manning your IVR call center, for example, or other sort of in-person store representative, right? But in the end, we have to bolster the systems with stronger platforms and other sort of unique tools to prevent fraud or or have better customer experiences. So I think we have to, like, as businesses, we are seeing this, we have to invest in some of those technologies and platforms and integrations with vendors. And it's just a shifting of that, right? Overall, the cost of running a business will still continue to be something that we have to keep in mind there.
I think it's a very quick question, though, because so many businesses saw declines in their revenues last year as consumers weren't out shopping or weren't out frequenting restaurants or weren't going into retailers. And so they had at the same time to deal with declining revenues, and they had increased costs to support the new normal. And I don't know that probably, Albertsons probably weathered that fairly well, but I imagine it's a lot of the small and medium-sized businesses that struggled a lot more with the underlying costs to support the shift.
I was sorry to interrupt you there, Ginger. What I wanted to also say is that these changes are actually what we're seeing, and what I'm seeing is they are streamlining especially some of the small businesses. Like I was talking about earlier, it's very expensive to run cash. It's very expensive to have these old machines that they had to run the cards. Now with the contactless payments, with the cash out of the payment ecosystem, it is a lot more efficient. And we're seeing that especially with the business-to-business payments. I mean, if it wasn't for the PPP loans and the economic relief payments, this would have been the first year that we would have seen a decline in ACH payments in the U.S. because there's been a lot more shift to cards and there's more QR code payments. And people could say, well, they settle ACH in the back end. Well, not all of them do. There's a lot more card processing that you're seeing on the business side. So there is slowly a shift into also saving and streamlining the process that we're seeing.
So many changes that are happening. We are almost out of time, and I want to wrap up with a bit of a roundtable with all the panelists. And so I'm gonna ask the question, and I'll kick it off with you, Kothai. As we're coming out of the pandemic and life returns to normal, whatever that means, will we revert to a pre-COVID world, or do you think these new behaviors are going to continue? And let's start with you, and we'll go around the room.
I think a lot of the behaviors that we've seen over the last several months will continue going forward. I think, especially when I look at Albertsons and I look at how people are shopping and what they're shopping for, I don't really see those trends reverting back to a pre-COVID world. I think the e-com volumes that we've seen, the growth in e-com that we've seen, I think that's sticky, and we're definitely going to see that going forward. I think the expectation of customers to make their shopping experience more friction-free and make it more easy and make it more time-saving, all of those trends will continue and maybe even accelerate in the future. People now realize the value of having things delivered to you and the ease of contactless payments and the ease of just being able to walk in and walk out and not really have to think about checkout. I think all of that is going to continue in the future.
Great. Michael, how about you?
Yeah, I agree. I think certain things will accelerate definitely in wholesale and business side. I don't think we'll revert. I think folks will look at just how to make their own processes, payment processes more robust, right? Some things might have worked out of sheer luck, right? But, definitely large companies will be forced to ask themselves, right? What do I need to do? Definitely if you're in the regulated industries like banks, regulators will take a look as well, right? Once sort of officially moves back to normal. How would you do this? How would you do that, right? So we'll see some of that stuff in stress testing scenarios probably coming in for the banks. And then sort of trickling down, right? Large corporates will ask themselves the questions, right? Let's say we're from Kothai as well. What do we need to make for B2B payments, right? In these scenarios, what will need to change to make it more crisis proven, right? So I think there will be a lot of more things will just accelerate, I think, in this space, right? So what worked, what didn't work, and then pick up on those trends that really have proven themselves.
More acceleration. We can
Yeah.
handle that. How about you, Suresh?
No, actually, as a payments industry, I'm so passionate about all of that's been happening, right? I think the US has generally been lagging behind some of the other markets, but I think what happened over the last year and a half has accelerated. I don't think all the trends will be permanent. There might be some things, not everyone, right, is going to adopt all of these things. You will see millennials picking up on certain things, and then the other demographics kind of slowly building upon it. But it's exciting. There are a lot of, I think, as a industry evangelist, as well as from Verizon as a retailer, we are looking forward to benefiting from these trends, and then also bringing these experiences to the customers, right? Whether it's businesses or consumers. So these are positive trends that we want to build upon.
Jesse Sandoval, how about you?
Yeah, I'll make it quick. I don't think there's any turning back. I think the ship has sailed. I think there's going to be a lot more around what Jesse talked about. Technology, as long as we get that under control, authentication, I don't think there's any point back. I think this change is happening. We'll see, but that's my take.
Jesse Franklin?
Yeah, I in line with what everyone's saying, I think a good analogy is probably what has been happening with Amazon and the e-commerce world, right? Where you see over time how Amazon has just been taking more and more market share and e-commerce taking more market share. The reason for that is just the rest of the economy kind of adopts, realizes the convenience, and part of that becomes permanent. You keep hearing the word acceleration. And I think that, yes, what happened was just an acceleration of what was going to happen anyway. So if that was going to happen anyway, it was just accelerated, it's likely to stick. I think the consumers are going to continue to use convenience for things that are necessities. And I think they're going to continue to seek out experiences, cool experiences, because we are human and we don't all want to be in our homes all day. And for us that have kids, you want to get out of the house, and otherwise you'll go crazy. So people will continue to, I think the economy will continue to transform more experiential, while all of the necessities will continue to become more digital and more convenient. And I think that the pandemic just accelerated the shift to digitalization for necessities. And I think that's here to stick.
I think that's a great point, and I think it circles back to what Kothai said at the beginning, right? That or in one of your earlier answers, right, where you start looking at ways to kind of automate the center of the store, but you keep the outside of the store where I go to pick my own produce, my own meat. Like, so the experience that I want to have is to pick those fresh things, but the rest of it is a commodity, and I can let something else or someone else or the e-commerce system handle that. And that shift in our kind of behaviors is accelerated, but certainly seems to be here to stay. We are out of time, and I really appreciate the time all of you have taken. This has been a great discussion. I know I've learned a lot. I hope our audience has as well. I wanted to thank all of you for taking the time to be here and for sharing so generously of your experience and your perspectives on what's happening in the space of payments. Thanks so much, everyone.
Thank you.
Thank you.
Thank you.
Thank you.
Bye-bye.
Thanks. Great job, everyone.
Thank
Thanks
you.
so much.